on the D Street as benchmark extend gains of more than 200 points to trade above the 25,600 mark as IT stocks see short recovering and volatility index cools off. Broader indices also move in tandem. All sectoral indices stay in the positive territory and metals and IT leading the up move.
The US has imposed preliminary duties of 126% on Indian solar imports. So Wari tells ET Now its US manufacturing base shields it from the impact and capex plans remain intact. Both Wari and Vikram Solar are under pressure today.
Shares of the IRFC fell after the government launched a 5,400 crore offer for sale at 104 rupees per share, a discount of almost 5%. The stake sale will cut government holdings to 82%.
It's yet another battle brewing at India's largest conglomerate group as Tata Sons board differ decision on reappointment of N. Chandrasekaran. Sources tell ET Now that Noel Tata has put forward conditions to the reappointment and N. Chandra himself recommended the deferment of the decision.
India and Israel have begun the first round of FTA talks focusing on tariffs, investments and technology cooperation. The pact, backed by an earlier agreement and visits by PM Modi, aims to boost bilateral trade beyond $3.6 billion.
Everything was working well. Countries that were ripping us off for decades are now paying us hundreds of billions of dollars. They were ripping us so badly, you all know that. Everybody knows it. Even the Democrats know it. They just don't want to say it. And yet these countries are now happy.
In his State of the Union address, Donald Trump called the Supreme Court ruling unfortunate and vowed to expand tariffs. He claims strong investment inflows, falling inflation, rising jobs and lower fuel and healthcare costs, calling this a golden age for America.
Hello and welcome. You tune into bnsn. I'm Ankita Saxena and with me is Kavita Thaplyal. In the next 1 hour, we'll get all your stock-specific questions answered. Keep writing in your questions. We'll shortly flash the number for you and we'll get all your questions answered by experts. But first, let's take stock of how the market is really shaping up. Well, a good recovery that we see coming in, especially after yesterday, after yesterday's sell-off. There, the number is flashing on top of his on his screen. Please share your questions, the buying price, and your holding period, and we'll get them answered. Now, if you look at Nifty, we are up almost 200 points in the trading session. Good recovery that we saw coming in. 25,620 levels is what we are managing to hold on to as far as Nifty is concerned. Nifty Bank, though, had also gained up. Nifty Bank has actually given up those gains from the day's high. It's down almost 144 odd points from the day's highest point, but nonetheless holding out in the green with the gains of 0.1%. Look at the broader end of the market. If you pull up mid-cap and small cap, mid-cap is trading up 0.5%, and small caps is the one that's outperforming, trading with gains of 0.8% right now. And all the sectors are trading in the green right now, especially the reversal that's come in on IT. Now remember, even back on Wall Street, we do see that reversal coming in. After those fears from AI, IT is seeing reversal. Counters like Infosys, HCL Tech, LTI Mindtree, TCS, the bigger names are leading from the front with gains of more than 2.5+%. Nifty Metals is the other pack that is doing well with gains of 2.2%. We have Lloyd Metal that is doing well. Now that is, on the back of the upgrade, the initiation note that's come in from Nomura, and on the back of that Nomura note, Lloyd's Metal is trading up 5% in the trading session. Besides that, we have a couple of other buzzers in trade. So solar energy stocks, that one are to be watched out for. Vari Energy, that's down 10%. Premier Energy is down 10%, Vikram Solar, that's down 5% because US has set initial duties on India's solar imports to 126%. And on the back of that, you see all the solar companies that are declining away in trade. But besides that, let's talk about more stocks that are in focus. In fact, we have a couple of other names like Alembic Pharma. That's up 2%. It has received final US FDA approval for its abbreviated new drug application. And on the back of that, Alembic Pharma is trading higher, but it has given up all those morning gains right now reeling under selling pressure with cuts of 0.1%. But IRFC is also down 4% as the government has planned to divest its 2% equity stake in IRFC via OFS, and on the back of that, IRFC is trading with cuts of 4% now. MD Photovoltaic is also down 2.7% as US has set 126% duties on solar imports. So that's another counter that is seeing that decline coming in. Besides that, we do have Schaeffler India that is up 5% after posting a strong Q3 numbers. So that is also in focus. And also a couple of other names like we have SAIL that is in focus. MK has seen sharp earnings rebound for SAIL, and on the back of that, SAIL is also in focus, and that is trading up with gains of 5% odd. But moving on from there, we do see a couple of names that are in focus. We'll talk about them, but we'll also talk about another name that is in focus, and that is LG Electronics. And remember, summer season is around the corner, and all the electronics, all the AC companies are on a price hike spree. And to talk more about that, we are now joined by Sanjay Chitkara, who's the Director and Co-Chief Sales and Marketing Officer, LG India, to know more about the future outlook. Hello, thank you so much for joining us, sir. Firstly, with the peers guiding for a 5 to 15% AC price hikes due to commodity pressures, especially sharper increase in the 5-star models, how are you planning your pricing strategy this season? Will you match the industry hikes? And what does this really mean for the margins versus the market share?
Prices are impacted with high input cost and forex, and largely due to efficiency improvement. As new star rating is uh, complied, so the input cost has increased. So in this situation, 7 to 8% price increase for 3-star and 9 to 10% price increase for 5-star we are taking for new star rated air conditioners. But last year we saw a GST cut from 28 to 18%. So this higher cost of air conditioners for newly introduced energy efficient ACs is mitigated with the GST cut. For consumer, the cost will remain same as like last year.
All right, Sanjay, let's also talk about the expectation now. The industry expects summer demand to revert to 2024 levels with double-digit growth this time. So, what is your demand outlook for the season? And are you seeing early indicators of strong secondary sales momentum also catching up?
India's tropical monsoon climate has always supported demand for summer products, and these products are just basic necessity for every household. These products are no more luxuries, and most importantly, the penetration of cooling products is very less in India. Like air conditioner is just 13% penetrated, refrigerator just 35%. So, which support the long-term demand outlook for this category. Recently, the new B norms are effective from January 2026, and this star rating was introduced in India in 2007. At that time, it was voluntary, and in 2009, it was made mandatory. Since then, we saw a 50 to 60% power efficiency improvement in air conditioners. For example, a 110 AC, which used to take in 2009 roughly 1500 watt average watt, now it consumes 580 watts. So this is helping a lot of first time buyers to enjoy cooling comforts without pressure on their monthly electricity bill. And as far as LG is concerned, we prepared early for this year. We introduced our new star rated range, and we introduced features like Energy Manager, which gives freedoms to consumers to decide their electricity bill. Overall, with improving efficiencies, favorable penetration level, India's climate condition, we see a positive demand outlook, but staying in a discipline in our expectation.
Mr. Chitkara, you plan to double your exports to the US and the Europe. What revenue share and margin profile do you expect over the next 3 to 5 years, and how dependent is this on the India-US tariff talks and the India-EU FTA?
So currently our export portion is 6 to 7% of our overall revenue, which amounting to 160 to 170 million dollar. And we are exporting to Southeast Asia, Middle East, Africa. Our export is mainly volume and mid-zone products like refrigerator, washing machine, compressors. But this recent development in tariff uh, has opened many new doors for further expanding our export. It would be too early to comment on this because we are stimulating various situations and calculating it. But definitely, we have intentions and efforts are going on to expand our export. Uh, Earlier, we were supplying only mid and volume zone products, and the demand for premium product is there for other developed nations, which you mentioned. And last year, in our Pune factory, we started producing Pune premium products also, like 600 liter plus refrigerator, side by side refrigerators. So we are totally ready, and our specifications are also matching with the global standard. Our quality standards are very high, and we believe that we are in a situation to create a momentum in our export business.
All right. You've secured almost 705 crores in incentives from Maharashtra now. How will this capital be deployed?
Right now, I don't have much details about this to comment on this. Our board will decide the utilization of this incentive benefits going forward.
So, over the next 2 to 3 years, which will be the key growth and margin driver for you? Premium B2C, essential series expansion in tier 2, tier 3 markets, new categories like chest freezers or B2B verticals, and how will the revenue mix to shift?
India is a very large and diverse market with multiple consumer segments. So while LG was always a very strong premium brand, and now our intent is to expand our premium experience to the wider audience. Hence, we have recently introduced our essential series with the help of value engineering. We could able to manage our profits very well with this series, and this series is very much affordable and without compromising our core technology, energy efficiency, and reliability of our products. So essential series will bring new customers to LG's ecosystem. So we will not only expand the volume zone segment, we will keep focusing on our premium value-led growth in India by introducing many industry first technologies. Like we were the one who introduced OLED TV in India, inverter AC transition was induced by LG Electronics only. Apart from this, we will also focus on our service business like AMC business, B2B solutions, and Essential Series will help us to participate in entry level segments also in a very disciplined way. So our strategy is very much balanced, expanding our reach wherever market is under penetrated and while continuing to lead the premium product categories.
All right, Mr. Chitkara, thank you so much for joining us. It was a pleasure to have you on the show. We'll let you go on that note, and it's time for a quick break. Don't go anywhere after the break. We'll come back and answer all your questions on the other side. So stay tuned and keep writing in.
Right, welcome back. You're watching Buy Now, Sell Now, and let's look at the FNO 360 powered by 5 Paisa. Sajid is here to take it away. Sajid.
Thank you. Welcome back to FNO 360. Let's take a look at how the FNO market is doing. Starting with the Nifty futures, how it's doing. You have the Nifty, which is up nearly 0.7%, and we're seeing a premium of 151 points on the Nifty futures there. And the open interest is down nearly 4%. Going into Nifty Bank, the bank index is almost flat there, and we're seeing some kind of unwinding happening in open interest in the Nifty Bank. The open interest is down nearly 0.3%. If you look at the snapshot of Nifty Bank of how each of the stocks is doing, there are a lot of short covering which is happening in SJC Bank, as a result of which we are seeing some unwinding of positions. ICICI Bank again a short covering which is happening. Axis again a short covering. SBI there's a long unwinding. Bank of India and you have a Bandhan Bank where we have seen a long unwinding there. AU Small Bank, there's a small short covering which is happening, and the open interest is down nearly 1.26%. Going into the FNO gainers, we have a Bosch which is up nearly 6% in futures. Hero Motors, Moto is also up nearly 5%, and KPIT Tech up 4.5% in FNO trade. FNO losers, we have Wari Energy down nearly 12% there. Premium Energy down 6% on the back of those US duties which have hit Indian solar makers. IRFC is down nearly 4.5% in today's trade in the futures market. Among the open interest gainers, we have Wari, where there's a short build-up been seeing. Open interest up nearly 68%. Premium Energy again a short build-up been seeing. The open interest up 17%, and IRFC short build-up again. The open interest up nearly 16% in terms of contracts there. Among the losers, we have Bharat Forge. There's a short covering happening there. The stock is up. Open interest down nearly 6.8%. Jubilant Foodworks, there's a long unwinding happening. The open interest are up 6%, and Hitachi Energy again short covering 6% open interest up in terms of contracts for them. If you look at now the OI change, that's interesting, which is coming in. You have puts getting built up at 25,600 levels and 25,500 levels, and then you have the call build up happening at 25,700 and 25,800. With the overall band now seems to be now moving by 2.81 lakh contracts. So that's an update from the FNO market in FNO 360.
All right, Sanjeev, thank you so much for joining us with the roundup of the FNO verse. But let's get started with the show now without further ado. And we are now joined by Shaina Mukaddam, independent analyst, and Himain Kapadia, technical associate, DR Choksi Finsa, who's now joining us. Hi, good morning to both of you, and thank you so much for joining us on the show. So let's get started with the first question that's coming in. The first question is coming from Shiva Reddy. He is writing in from Andhra Pradesh. He says, if he can buy SBI and Axis Bank and BEL at the current rate, he wants to hold it for the long term. He wants to know the entry rates, entry points for SBI, Axis, as well as BEL.
A very good morning to you, Ankita. Thank you for having me on the show. It's always a pleasure. I would request him to wait a bit to buy State Bank. We've had I know it's a long-term view, but we've had a brilliant run-up, Ankita. It's technically stretched over about. It's gone up from some 680 to 1234. Buying after such a run-up really doesn't make sense. Maybe I believe he can do an SIP. So you can buy it at 1200, 1180, 1160, and so on. So, but wait a bit, things are getting heavy. So yes, you can buy it 50 and 100 rupees lower as far as State Bank is concerned, Ankita. And the other two stocks you mentioned?
I mentioned BEL and Axis.
Okay, BEL he can buy at current and slightly lower level, but yeah, he can buy at current levels, supported 430. Axis Bank, frankly speaking, Ankita, looks to be the best of the lot in the sense. So yes, from a longer term point of view, it would be probably BEL, Axis, and State Bank at current and slightly lower levels.
All right, let's move on. And this is a long-term investor question. Nirmala from Cochin, and ITC is the stock in focus. Shaina, she spots 750 shares at 305. She wants to know if she can hold or maybe sell and just switch to some other counter. What will be your recommendation?
I would say at present it is better to continue to hold ITC because in the volatile market, one is that FMCG has not really performed in the last couple of the sector as a whole in the last maybe 2-3 years, and neither has ITC if you look at it on a say 1 year basis. So that I would believe gives you, along with very attractive valuations, I would believe the downside is very limited and her buying price is very attractive, so it is better to hold. Yeah, we have had higher taxes that will come on cigarettes, but I believe the cash flow from ITC is so strong that you should continue to hold it for the medium to long term also. Not only do you get the benefit of good dividends, but I believe the worst in terms of taxes, increase in taxes is now behind us, and we will have to see the impact on volumes. But I believe over next 2 quarters it should stabilize. So continue to hold.
All right, so that's the word coming in. But with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll continue to answer your questions. So stay tuned.
Welcome back. You're watching Buy Now Sell Now and we are answering your stock specific questions. And let's move on. We also have our viewer connected online, Mr. Shankar from Chennai. Hi, good morning, Shankar. How are you? Okay, I think there was a phone line that was cut. We'll try to reach out to him again. But then, yes, we have his question and he wanted to know about Bharat Forge for a year's time horizon. Is it the good time or the right time to buy? Shaina, till we get him on the phone line once again, what could be your take on this particular counter?
Well, yeah, I think the only negative in Bharat Forge is the uncertainty in the US duties. Because, as you know, there's a lot of uncertainty as to whether it'll be 10%, 18%, or whatever. So that is the negative. But otherwise, in the domestic market, they are doing pretty well. And they have got a lot of orders from the defense local market. And I believe that the auto industry also is a large component for its overall sales, even in the domestic market. And there, I think I would say with OEM starting to show better volumes, it should do well. So I would say yes, you continue to hold, but you have to keep a little bit longer term perspective and be wary of any changes, adverse changes in the import duty. If it goes back to much higher levels, then you could see the stock correcting based on sentiment. And because the 150% duty that is being, the duty that is being talked about of about 18%, we do not know when it will come into effect. So you have to be careful about that. But otherwise, I would believe it's a good stock for the longer term.
All right, in the long term, Bharat Forge is a good stock. That's the call coming. Let's move on to the next question. This is coming from Swati. She wants to know the fundamental view on whether she should book loss on these mid-cap IT names. She is sitting on a loss of 20 to 25 odd %. But now that the valuation for large-cap IT seems to be better positioned, what should she do with her KPIT Tech, Persistent System, Coforge and Emphasis? Should she book her loss or should he hold on to it? Shaina, that's a very interesting question. She says that she's already sitting at a loss of 20 to 25%, but all of these, after correcting, seem to be more attractive. But she feels that maybe large caps are better positions. What would be your call?
Well, along with the large caps, even these mid caps, which are actually, basically better placed in terms of the quality of the earnings, like you mentioned, KPIT as well as Persistent. These are better quality earnings in terms of the potential over the next 3 to 5 years. Having said that, I think the overall market has corrected. So something like a KPIT Technologies, I mean, if she wants to buy in, I think she needs to look at lower levels. I would say a level maybe close to something like something like a 650 700 because valuations are expensive across the board, KPIT Technologies. So even same goes with Persistent. So look at little lower levels, maybe 5 to 7% lower levels if you want to make an entry. And then you have to hold it for the longer term because we don't know how the market is going to shift in terms of revenue growth for these companies over the shorter term. So you could buy at lower levels because the sentiment for the sector is negative. So you buy it at lower levels and then you can look at a long-term holding period.
Sure. All right. Let's take this question on Avanti Feeds, and Hemel, I'll come to you. This is Murli from Andhra Pradesh, and Murli says that he's bought 130 shares of Avanti Feeds at 1424, and it's almost a 1 month horizon that he wants to hold on to this. What would be your stop loss if at all you are recommending a hold?
Yes, Kavita, I am recommending a hold with a closing stop loss of 1284. Needs to close above 1422 to appreciate further.
So that's the stop losses for Avanti Feeds. We'll move on. This one's coming from Partha Banerjee, who's Bhattacharjee, who's writing from Durgapur. He says he's holding Pidilite Industries and Varun Beverages for quite some time. He wants to know if he should hold on to them, sell them, or are there better stocks that he can get into China? Varun Beverages and Pidilite, what would be your view?
I would prefer Pidilite over Varun Beverages if he wants to buy one of the two. Varun Beverages, I believe the valuations are still expensive, but Pidilite, I believe they're doing pretty well in most of their sectors. And even in the new products that they've introduced over the last 2-3 years, they're doing pretty well in the tile adhesive business also. So I would say while Pidilite is slightly on the expensive side, but if you look at a 1 to 2 year view, I think Pidilite looks attractive even at current levels. So any dips you get, I think you can look into entry in Pidilite.
Okay, let's take this question on NTPC, and this is again a 12 to 18 months view, Shaina. This is Navendu Sharma from Patna, Bihar. And 500 shares of NTPC at 325, should I hold or exit? And the time horizon is also very flexible. That's what he says. So what is the recommended strategy? Whether he should be holding it further, averaging it?
I NTPC you can continue to hold, and yeah, you can also average, like if you really want to make good money, it's better to average at slight dips. But I would say anything above 360 should be a good level to add, which is also close to the current levels. They're doing pretty well in terms of even the overall sector is in good. I would say it's positive. The power sector, they have got good projects both in the renewable energy space as well as in their captive original sector that they are in. So I would believe you can continue to hold. Their balance sheet is also reasonably strong. So they've got huge order book also in terms of expansion capacity that they're planning to do. So I would say continue to hold, and then you can average at maybe 10-20 rupees lower to get a decent return.
All right, let's move on to the next question that's coming in. That's coming in from Mali, from Hyderabad. He wants a fundamental analysis of NetWeb technologies, and also wants to know if he can get into get more of it at the current levels or wait for correction. So first, Shaina, let me come to you, because this is yet another question that's coming in from the mid-cap IT space. NetWeb technologies, all these names like a Persistent System, a Coforge, NetWeb. While all of these are strong companies, do you feel that the valuations are now good to get into these? And for the longer time horizon, what do you feel for NetWeb? Shahina first.
Yeah, so NetWeb is, it is definitely a stock that can give you a good return over the longer term. But I would say you can buy it at declines. The order, they have got a very strong order pipeline, and they're doing well both in their high computing solutions, which contributes about 35% of their revenues, and also in terms of their infrastructure and cloud. So all these sectors, AI is contributing a small percentage, about 5%, but I think there the opportunity going forward is pretty strong. So if you add, but since in terms of pure valuations, it's slightly expensive. So I would prefer if we can add somewhere close to about 3,300. But if you're holding it, you can continue to hold it for the medium to longer term.
All right, with that, it's time for a short break, and post that we'll continue our viewer-specific queries session with Shaina and Hemin. Stay tuned.
Welcome back, 18 into Bana Salam, where we're getting all your stock-specific questions answered. And now we're joined by a caller, Punitha, who's joining us from Coimbatore. Hi, Good morning, Punita. Tell us what's your question.
Hi, good morning. I'm Ponita from Coimbatore. I'm a regular viewer of VT Buy Now Sell Now program. Today I have called to ask about Shakti pumps and IT sector stocks. I am a long-term investor. First one is I'm holding 200 shares of Shakti pumps at 680 rupees. Should I sell, hold or average it? And the second one is regarding IT stocks, holding 27 shares of HCL at 920 rupees, 34 shares of Exaware at 770, 13 shares of L&T Technology Service at 4,300. So what should I do with this IT sectors? If possible, suggestions also welcome about Voltam and Transformers Limited. So can I buy at this rate? Thank you for your time.
Thank you. Those are a lot of stocks, but we'll first start with Shakti Pumps. Shakti Pumps, Himain, let me come to you. She's bought it at 680 rupees. What should she do as of now? She's clearly sitting at a loss. What should be your call?
Slightly late in the day, Ankita, but I believe stop loss should have been triggered. Having said that, lower top, lower bottoms, I don't see anything good. It's in a sell mode on all time frames. So unless you have she specifies she's a long-term investor, but if you have a time frame of 2 years or more, you can hold on. Otherwise, it's a sell on bounce. Further pain is around the corner. If she can ride over that, then it's okay.
That's the view for Shakti Pumps. But for the IT pack, since she's a long-term investor, I'll come to you, Shaina, on the IT pack. She has HCL Tech, Hexaware, and LTS Tech is what she has. What would be your view for these three counters? Are they worth holding on to, or should she get out of these?
Well, I believe that in terms of most of these IT stocks in line with the overall market and the sentiment for the sector, they all have corrected. So from here on going forward, I would still believe that she should reduce her overall exposure to IT and relook at it maybe 6 months down the line when there is clarity as to what is happening in terms of the demand or the situation in the US in terms of demand for services from Indian companies. Having said that, I would say HCL Tech is better placed compared to the rest. Hexaware Technologies also has corrected a lot, and it still looks like the downside is there for some more time. So I would say that you hold one of these three, maybe HCL Tech, and you pair your positions in the other two stocks. Relook at it 6 months down the line.
All right, let's take this question. This is from Lakshmi Vijayawada, and Heyman, I'll come to you because she's bought sale 1,000 shares at 67, IOCL 500 shares at 76, and she wants to know whether she should be exiting or holding on to it for some more time.
I believe you said sale.
Right.
Yeah.
Fantastic pricing, yeah. Sale and IOCL.
Okay, Kavita. Sale, I think she can hold on till around 175. Metals are looking good. Tata Steel is leading. Sale, I'm telling her to book some profit at 175. That was a swing high posted in May 24. So that's where she can book some profit. IOC, if she has a slightly longer term outlook, some patience, PSU company, oil, a lot of government intervention. Stock is going to 210, but it's going to take some time. So hold as of now. There could be some turbulence at 185 and 196, but we're going to 210 for the next 12 to 15 months.
All right, so now we completely timed out, but we have time for one last question that's coming in from Vidya from Chennai. She's a short-term trader. She says she's holding 50 shares of MGL and she's sitting at a profit now. What should she do? Should she book profits or hold on to it? What are the suggestions? Himain, MGL, she's sitting at a profit right now. What should she do? Is there more upside?
I think so. Yes, further upside, yes. Hold, stop loss, protect profit of 1160 going to 1240 or more.
That is a wrap on today's edition of Buy Now, Sell Now. Thank you so much, both of you, taking your time out for our viewers today. Thanks a ton. And for our viewers, that's it on this edition of Buy Now Sell Now. A short break, and post that we'll get you market set noon. Stay tuned.